we are particularly keen and enthusiastic about this particular webinar. We covered investment and business opportunities in Asia in another webinar in June, and now we're covering what the landscape looks like in Europe with 3 different countries. Although Fabrice is sitting in Hong Kong today, he really covers Europe back and forth to particularly to mainland. Anyway, we'll get into that later. Thank you all very much for coming, Peter in the UK and Hicham in Switzerland. This is webinar number 91 for the club. We started April 7th of 2020 with webinars as a response to our live meeting in COVID, which we could no longer do. And so the beat goes on, and we're waiting for live meetings to start. We hope that with government regulations easing and the variant hanging over our heads, still we hope to have our fall events. In any case, and we hope to open New York City, our first international club, in October, and you can stay tuned for that. So without further ado, I'm going to introduce Eric, who is the Senior Vice President of the M&A Club. He represents us at the Asian Financial Forum in the last few years as co-mission leader for Canada. Eric has a long career in both actually in FX, in the FX world and in M&A. And he was at the first meeting of the M&A Club back in February 2009. So Eric's been a loyal and staunch supporter, and of course the club has benefited his practice. And thank you, Eric, this morning for doing for completing the moderator role. And I'll turn it over to Eric, who will introduce our speakers today. So thank you all very much.
Thank you, Bram, for that great introduction. Listen, I'd like to say good morning, good afternoon, and good night. I think we've got people from all over the world, including the panelists from around the globe. It was quite a challenge to get everyone together with the different time zones that we are in, but here we are this morning. So I'd like to welcome everyone. We took a small break during the summer, so this is the first webinar of what we call the new season. We start again in the fall. We always take a small break during the summer. So I think the introduction by Bram for myself is complete. No need to say any more. So without further ado, let me go on and present our panelists today and give them the chance to give their presentations. The title of the webinar this morning, M&A Review from Europe. We've got senior advisors speaking from UK, Switzerland, and Italy. Once again, our first speaker will be Peter Gray. I've got the great honor of introducing Peter. Peter is the president of Oaklins International, and he is a partner at Oaklins Cavendish, one of Oaklins member firms in the UK. He also leads Oaklins financial services team. And since joining the firm in 1994, Peter has been involved in the sale of over 70 companies, including many in the financial services sector. He's a frequent lecturer on the subject of mergers and acquisition, and he's written a book on the subject entitled The Definitive Guide to Selling Your Business. So, Peter, I invite you to share your screen for your slides, and you've got 10 minutes.
Great. Well, thank you very much, Eric, and good afternoon, good morning, good evening, everyone from not so sunny London. It's great to see in the middle of August some other people not on holiday like myself. So it's very, very reassuring. What I'm going to do in the next kind of 10 minutes or so is just to give you an overview of what's happening in the M&A market in the UK. And just kind of track back to the period kind of when the world changed with COVID in spring of last year, and see what's happened since that time. But it's been a kind of a fascinating last kind of 12 to 18 months for all of us, and here in the UK that has been no exception. So this chart shows the quarterly movement in M&A activity over the last few years. And not surprisingly, what it shows is that, you know, in Q2 of last year, the market took a beating. So what we saw kind of post-COVID is, you know, private equity firms pretty much stopped investing. They had their own kind of issues within their portfolios that they were attending to. So not making many new investments. Ditto with kind of corporate buyers. And the other thing that impacted, you know, the market and the propensity of especially overseas kind of trade and private equity to do deals in the UK, and you know, we have a huge reliance on you know, that genre of buyers. The great thing is for us is they're fantastic because they pay higher prices typically, especially kind of US buyers. So that kind of dried up for a period of time. People were very kind of inward looking in that kind of that 3-month period. You know, the banks closed up like clams, as is typical, but also, you know, there was just a general level of uncertainty prevailing in the marketplace in terms of, you know, what the impact of COVID was going to be on both the economy at a macro level and at a micro level, impact on individuals, firms' performance, individual sectors' performance. And as we all know, you know, uncertainty is the enemy of M&A. You know, confidence is what drives the market. So for the market as a whole, and for us as a firm, we had a pretty tough you know, Q2 of last year. But then things kind of gradually picked up in Q3. We saw an uptick in deal volumes and value as the market, you know, got back to a bit of equilibrium. People decided that, you know, the ongoing uncertainty notwithstanding, you know, that they had to get on with investment activity, especially private equity houses. They're not paid for sitting on their hands, wringing their hands and worrying about, you know, uncertainty in the market. So we got to see an uptick in deal activity in Q3, and then we had a storming finish to the year in Q4, and an even better Q1. So in Q1, I think that represented kind of record deal levels on a quarterly basis, surpassed kind of levels kind of last seen in the kind of those halcyon pre-Lehman days of 2006, 2007. So, you know, who would have thought it, you know, back in the dark days of spring last year in Europe, that you know, we could have seen within a year a record number of deals in the first quarter of this year. And that activity level has continued on since that time. You know, we've got a kind of record level of mandates. And from a personal perspective, from a firm perspective, you know, we were staring into the abyss in Q2 of last year. We ended up having pretty much our best year ever. And you know, we weren't alone in that regard. You know, lots of our competitors also did incredibly well. So a complete turnaround. And it just took everyone by surprise, you know, how quickly the market regained its composure and got back to, you know, really strong levels of activity. And it wasn't just obviously deal values and volumes which recovered. Pricing is at an all-time high. And again, I go back to those kind of, you know, pre-Lehman days, 2006, 2007, with misty eyes, you know, those halcyon days. I remember very, very well. And I think, well, who would have thought that those times would be bettered? But you know, they have, in terms of both deal volumes and, as this chart shows, pricing. So you know, in terms of the average EBITDA multiple paid for private companies in the UK, we're now at an all-time high of 7 times. That figure obviously, boosted by some really big deals, particularly kind of private equity deals that have been done in recent times. And of course, also, as you know, there's massive variance industry to industry, and that figure is somewhat distorted by the volume of kind of tech related deals. But notwithstanding that, pricing at an all-time high. So from a vendor's perspective, there has never been a better time to sell a business. Bank debt is readily available to support private equity on their acquisition sprees. In fact, we've got now, over and above the kind of high street banks, we've got about 180 debt providers looking to deploy debt finance in private equity transactions. So the market is now extremely deep, not as deep as the US, but nonetheless, there has never been a better time for private equity houses looking to support their deals with debt, and the result is that debt is available on very high multiples, very low interest rates, and otherwise extremely good terms. The other thing that we have seen, we talk about EBITDA. Of course, we've now got this concept called EBITDAC, which is EBITDA before COVID, and our purchasers are accepting kind of COVID-related add-backs as one-offs that hopefully will not be kind of repeated in the foreseeable future. So in all the cases where we're handling mandates for companies adversely affected by COVID, we are making adjustments for adverse effects from COVID to the extent there are any. Of course, for many verticals, for many businesses, as we will see in a moment, they have had a fantastic kind of COVID, and to the extent that COVID has benefited their numbers, of course, we're not adjusting those downwards. And one of the big questions for purchasers in the market is, for those, in the case of those companies, so the digital businesses which have received a big boost from COVID, how much of that is kind of one-off COVID related, and how much of it is kind of permanent, and COVID just accelerated a trend that was already happening in terms of digitization. So that's kind of an interesting feature of the market at the moment. We also do IPOs within our firm, capital markets transactions, and we recently got away an online food retailer, and their results have come off a bit in the last 3 months. They issued a profit warning. So it very much is caveat emptor in terms of a purchaser doing its due diligence and determining, what is the underlying level of sales of this business. Take away COVID impact, where is it? So that's pricing in general, and what we're also seeing is that private equity, when we're seeing auctions between kind of private equity houses and strategics, in many sectors, private equity or private equity backed companies are outbidding strategics. There was a brief period. There was a brief period last year when strategics actually got the upper hand coming out of COVID, but normality has now been resumed, and you can see that on average, private equity houses are paying more than trade buyers for UK assets. Having said that, I suspect the figures are slightly distorted by the fact that private equity interest is particularly strong in kind of technology sectors where we've seen obviously much stronger pricing, whereas there are more buyers in the kind of traditional sectors like industrials and food and beverages from strategics, and they are kind of lower rated sectors. But nonetheless, in pretty much all of the exercises we've got on at the moment, we've got some really strong competitive heat from both strategics and private equity. And strategics, I would say, are getting better as they have had to at competing with private equity. So in terms of the kind of deal breakdown by industry, nothing much has changed really there, with consumer and technology being the two sectors where a big chunk of activity is taking place. Obviously, these days, everything is tech, isn't it? Everyone tries to position themselves as a technology business, and it's a real kind of challenge for a corporate finance house to position, when they're selling a client, to position them as a tech business, or certainly as a business that will attract the highest possible multiple. But yes, these days, everything is tech, isn't it? Ad tech, med tech, fintech, reg tech, legal tech, every tech under the sun, and it has to stack up to reality. But to the extent possible, we will always try and position a business as a technology play. Why are we doing that? We're doing that because if we can successfully position our clients as technology businesses, as tech plays, then we will get a higher multiple. But that certainly is the big play at the moment in terms of what's happening in the market. So as I said, it's been a fascinating market over the last 12 months, and there have been massive losers from COVID, but also some massive winners. And of course, leisure and travel, kind of high street, retail, etc. A whole series of sectors have been hammered by COVID, but there have been some sectors that have done incredibly well, like home entertainment, anything online, not just online retail. We're doing a couple of things in the digital healthcare space at the moment, with kind of digital doctor's appointments taking over from face-to-face. And then, as I said, the question is, to what extent is that trend permanent, or is it a baby of COVID? Is it driven by COVID? They are the kind of big questions. But technology has had a fantastic COVID. You just need to look at the financial performance of the tech giants and their share prices to see that. But that has kind of trickled down to all aspects of technology. So that is a big play for us at the moment. Logistics, as a result of massive increase in online retail, and Amazon and other online retailers' sales, that's had a great COVID. Takeaway food delivery services, frenzied activity in the market, both capital markets and in terms of M&A. So a whole series of sectors have actually had great COVIDs, and in fact, in many cases, have come to the market as a result earlier than they otherwise would. So we've taken a number of clients to market where their original plan was to kick off a sale process some way down the track, but the performance has been so strong over the past 12 months that has accelerated their route to market. We had one online wine retailer whose sales gone up 300%, primarily as a result of COVID, and we rushed them out to the market to take advantage of that. So I'll just finish up in terms of who's been buying UK companies. This shows the position for last year, and actually what's amazing about this, so we've got this by volume, UK 37%, by value 42%, with the rest international buyers, is the high percentage of deals going to overseas purchasers, notwithstanding travel restrictions, social distancing, which restricted the ability to meet kind of management physically face to face. And indeed, lots and lots of deals that we did were completely virtual deals where, bizarrely, the purchaser, the vendor, or the purchaser and the management team never met face to face. It was all done digitally because of the restrictions on travel and so on, which is totally counterintuitive. If I were a purchaser, I would feel very uncomfortable about not having met the management team face to face. But the market dynamics were such that if purchasers wanted to play the game, if they wanted to invest, private equity houses, they had to do that in terms of the new normal. So that was one of the most extraordinary features of the market over the past 12 months, which if someone had told me that we would have a big percentage of our deals done completely virtually, I would have said that they were barking mad. But that has been the reality over the past 12 months. So that's all I wanted to say in terms of formal presentation. Obviously, delighted to answer any questions in due course.
Excellent, thank you, Peter. That was a fantastic summary of the market from the UK. I see the questions coming in, and I will get to them. I'll just leave the chance to our presenters to do so first, and then we'll take the last part of the seminar to answer some of the questions that are trickling in. So let's change gears and go on to Hicham. Hicham, based in Switzerland, and a bit of a different profile. Hicham is also an entrepreneur. And so we will get his view as an entrepreneur of the markets, as well as the deal activity from Switzerland and other markets. As a description, Hicham is a seasoned business executive in institutional investments. He's involved in business transformation and development as well. As I said, an entrepreneur. He's got some experience in entrepreneurship in the biotech and financial industries. He's latterly held senior management positions, developing business concepts across various asset classes, markets, and geographies. Interestingly, Hicham speaks 5 languages, and he's authored and co-authored some research documents in his quest to connect financial theory to the real economy. And so, Hicham.
Thank you, Eric. Thank you, Bram. Nice meeting you, gentlemen. It's a pleasure being with you today. Thank you, Peter, for the presentation. It's very insightful to all of us. I will try, actually, from my perspective, as Eric mentioned, as an entrepreneur, to provide some sorts of explanations to the numbers provided by Peter. So what makes those deals hot, and what makes it today seller or buyer's market? In my opinion, I think the current context of COVID-19 brought with it the new definition of what we call disruption. The latter is becoming more normalized today. It is pretty much taking the place of the innovation concept in terms of centrality. So we can speak about we can be talking about the decline of the current center in favor of the rise of extremes, and hence the impact we have on the PE and M&A deals. If we step back a bit and we look at this phenomenon, how it has been accelerating across many dimensions with the COVID crisis. So the pandemic did accelerate some and validate actually some trends, the root of which have already been taking place beforehand. The main impact of this current crisis resides in changing the normal, as I mentioned, and bringing concepts that were otherwise placed in the margin. And the speed of this acceleration fostered, in some aspects, a new overhaul of new paradigms with an overall connected concepts. This paradigm shift touches topics from technology all the way to business models, all the way to geopolitics and domestic politics in some aspects. It is also reflected at a lower levels of granularity, touching even the most basic human interactions and social relationships. Peter just mentioned making deals without even meeting people. And that's a very low level of granularity, which has changed, which has been brought forward with the pandemic. So the question is how to navigate this acceleration in terms of valuation, deal making, and transacting. How to direct it to making impact on the persons as an individual or groups or institutions in small enterprise or bigger institutions. For me, it is important, first of all, to look at the world, how it stood before the pandemic, observing a series of underlying factors that provided fertile grounds as catalysts of the different accelerations. In technology, we can see big data, AI, digitizations. These have all been there before the pandemic. In business models, we can see decentralizations, the flat organization, agility in processes, and confluence of different tools, innovation, not only to promote one impact across one aspect or one customer, but across every stakeholder out there and across every process. Even in investment models have seen their own disruptions. Classic return metrics such as interest rates, global equity returns have all been shattered. Interest rates have been structurally low and flat in the aftermath of the series of global crises we have seen. And global equity return enhancement, such as correlations or what we call decoupling, have been unvalidated pretty much, especially with the current crisis. So these have been there have been trends out there before the pandemic that the pandemic only accelerated. We can even see that in political models. Throughout representative democracies, we have witnessed rises of series of unexpected outcomes. Peter mentioned unexpected outcome for Q1 2021. Who look at the US politics, UK with Brexit, even France, we have seen a rise of a newly formed political party, bringing it to the power, to the supreme office, and so forth. In society, we have seen social media as well impacting both the way people interact and at the very micro relationship level, and yet causing a higher level of influence with an overload of information and an increase of what we call shadow work. So this is some sort of as well, which we call paradox. In demographics, we have seen a shift again, moving both from aging societies as well as to diversity. So there have been many aspects out there before the pandemic that have been only accelerated by the pandemic. And in light of all of this, the pandemic brought more evidence for these previously announced trends. It provides timing to complete what we call the evidence-based needed to design adequate answers. And in light of the scope of the impact, which are large and wide, the answers can only be successful within adopting disruptive lenses, and hence explaining the numbers that Peter have just mentioned. So when we translate these to valuations and deal making, we see that strategic investment characterizes the deal flow today in the current context. Indeed, both acquisitions that serve to complement a business model that currently exists, or acquisitions that serve to transform a business model and open new perspectives, are the prime deal making right now today. This is because it's about transformational deals that are more pertinent for growth. In the definition of a transformation can regard the type of impact being sought. For example, it can be about creating a jump in market share or about boosting profitability through a new cost structure. It can also regard creating access to a new business line or a market. It's not anymore, in my opinion today, about maintaining a competitive advantage. It is about preparing what's coming next. And these transformational deals in strategic investments that explain, from my perspective, the extent of the numbers have been mentioned by Peter. And the transformation deals focus also on recalibrating the strategy and accelerating the adoption of new technology. Therefore, deals around new technology and innovative capability will drive premium of value and hence higher EBITDA and so forth. So it's not about a seller's market or a buyer's market, it's about where do we stand today? What kind of value proposition are we bringing today to the table? And in technology, myself being in biotech and the financial industry, it's what is the value proposition being brought and how significant to that business from a strategic perspective. And the current context translates as well into the risk appetite associated to transacting today. So we have a change in risk appetite due to the pandemic environment, obviously, which impacts the deal making and making the alternative between seller friendliness to a buyer one, depending on the scope of the transaction. We see more use today of risk enhancement and management structures such as earn-out, locked boxes, as well as warranty and indemnity insurance. These have been more and more present today because of the risk appetite associated with those deal structuring today. And again, in some extent, we have longer times associated with the process that define more, flexible terms, to the buyer in this perspective, when we have more exclusive time for the buyer provided along the lines of what we call today incremental due diligence. in order to assess the business across all its fundamentals and in light of the pandemic impacts. It's almost like what Peter just mentioned today, is like the EBITDA. It's incremental. Is it pandemic related, not pandemic related? What type of impacts are we having here, and why we are having it? And in my opinion, to succeed in navigating efficiently through these new uncertainties, because we are in uncertainties after all, the fundamental elements for me that are necessary, evolve around two aspects: A, transformational leadership, and incorporating disruption within existing structures. Transformational leadership consists of approaching the concept of innovation beyond its limited and closed definition. It requires first and foremost to develop a sharp understanding of all underlying elements of that innovation. And here, I think we need to bring together all related concepts at every level and every process. And this transformational leadership conditions as well successful execution post the deal, because today, and we come to risk mitigation clauses in terms of locked boxes, many of the deals, even if they make good valuation and good transaction, but how successful they will be after the deal is happening. So that transformation leadership is very key as well for the execution, for the post deal making, and that's very, very important in my opinion today. And that's what makes today even good innovation succeed or not succeed. The second aspect is really to include the concept of disruption that is not in a broader term. It's not always, as we say, we should not leave it to only outsiders, to bring that disruption and then disrupt the center. It should be much more brought in and be included in every institution and every process. So today, the institutions, both public and private, they incorporate more and more disruptive lenses, and we are talking, about how to bring, how to explain the return, how to explain the impact on the business, and so forth and so forth, and taking advantage of the new plethora of financial instruments, for example, such as ability of private capital and diversification of these instruments with the advent of the SPACs. That's another way of looking at something new and different. SPACs is a new instrument, bit disrupting of what has been existing today, but this disruption should be included as well within driving the private capital towards deal making, and the disruption as well. Not only in terms of the instrument innovation as well, but also in terms of the executing the process of an M&A deal. Value creation requires today a new M&A playbook, incorporating new variables and sharpening the process of the target selection, due diligence, valuation, and integration. This is a new playbook, and that's part of the disruption process. So all in all, I would say M&A deals could be seen as part of the recovery process from the crisis. Digitization is a leading factor that has been accelerated with the pandemic across all sectors and corporate angles. Corporate carve-outs have also been accelerated as efficiency and business streamlining are being pushed through. So to get back to the bottom line, where do we sit today? Is it seller's market or buyer's market? It all depends. What are we talking about? What angle are we approaching? And this is my take on today's topic. And Switzerland as well as Europe, it's a sample for what's going on out there. Switzerland, for example, we have been speaking about the crypto valley in Zurich area, and then creating a new compartment in the Swiss stock market about the crypto valley, and that's part of the disruption. That's new diversification financial instrument that driving private capital towards making that disruption available and incorporated. So these are my takes, and then by chance I'll try to a bit give more of a reading on Peter's numbers. That's if I may.
Thank you very much, Hicham. Very interesting indeed. Especially the part about, we get asked all the time, is this a seller's market? Is it a buyer's market? And clearly everyone is referring to the market as being a seller's market, but it's an interesting take that you have on that dynamic. And hopefully in the question and answer period, we'll be able to get to it. Again, I see the questions coming in. and I will address them after Fabrice has given us his take on things. So let's continue our trip around the world from Canada to the UK, down south to Switzerland, and now continuing our path southeast to Hong Kong with Fabrice. Fabrice Turries is he's an ex-international lawyer, expert in the China M&A industry. He specializes in leading private cross-border strategic and financial mid-cap transactions, mainly between Europe and China. So from an Asian perspective, or an ASEAN perspective, perhaps we should say, Fabrice, the floor is yours.
Thank you. Thank you, Rick. Thank you, Hicham. Thank you, Peter. It was very insightful. I will present in, let's say, a more updating way the experience we have for the past few months on the European market in relation to M&A. I will focus more on, obviously, on continental Europe to give some broad tendencies. And then I will take France and Italy as a specific example of what we have been experimenting or experiencing in terms of M&A for the past few months. Our specialty as M&A advisors is really to focus on mid-market and small, medium-sized strategic transactions. What we have been suffering so far for the past few months is that the cross-border M&A has been dramatically impacted by the lack of mobility, the lack of possibility to have access to other people in a physical way, or to have access to assets that would be potentially interesting to acquire. But as Hicham has perfectly explained, there are some new ways to do M&A, especially in cross-border. If we look at Europe specifically and strategic deals, cross-border deals in Europe for the past few months, what we can see is that 2021 is a kind of back to the future. And a lot of signals and signs are indicating that the M&A market in continental Europe is reaching the numbers or passing the numbers that we have seen in 2019. Okay, but this is also very much due to the fact that very large deals by very large corporates have been implemented during the past few months. So we can see that there is, in terms of value of transactions, there is definitely some records that have been made, and Peter clearly demonstrated that in the presentation. While in terms of volume for continental Europe, we can see that we are still below what was going on in 2019. So the recovery in terms of dynamism of M&A in continental Europe is not totally done. But I can certainly confirm that Europe is open to M&A again. Okay? So there is, I would say, Europe is in the mood of M&A, which was not the case 1 year ago. It was a disaster in 2020, and nobody was interested in discussing any deal, strategic deals in 2020. Because the purpose was only to try to survive and recover, and to obtain a maximum of, let's say, financial support from governmental organizations. But today, we can confirm that M&A is back to business. This is on the agenda of the European companies for a very specific reason, that the COVID crisis has been a very strong warning to European companies to adapt to the future, and not to just be passive in terms of business model and in terms of growth. Okay, and as Hicham perfectly explained, it has been a strong accelerator of reinventing European companies, their own business model, and try to expand in a way that will be secure their existence for the future. this active external growth activity is not the same repartition, the same speed between the different countries in Europe. We can see that North Europe has been much more active in terms of M&A activities and in general external growth activity, while the strategy for some companies from the South Europe was probably a bit slower in terms of implementation. And here we can see that it's the direct impact of the COVID crisis. Definitely, the companies from South Europe has been much more impacted, deeply impacted by the COVID-19 crisis. However, we can see some very strong similarities or common points among all of these European companies all over Europe. First of all, we can see that there is a very abundant amount of private capital available. And this will definitely impact the M&A activities for the coming months. We can also see, as I mentioned, a very strong M&A dynamic. A lot of companies in Europe have been frustrated for the past few months not to be able to proceed with some strategic external growth. And there is a very strong appetite today to go back on track in terms of M&A strategy. We can also see, as Hicham and Peter mentioned, the fact that there are valuation issues regarding European companies. And this is valid whether for very local transactions or cross-border transactions. And is valid for both financial operations and pure strategic transactions as well. You have on one side the sellers who are considering that 2020 is a blank year that should not exist, and we should jump from 19 to 21 immediately. And also, in this, we are supported by the fact that 21 is delivering good numbers in terms of business development. On the other side, obviously, this tendency of the sellers to consider 2020 as non-existing is hurting immediately the strategies of the buyers, which are, on the contrary, very opportunistic on the fact that 2020 has been a difficult year, which should impact the valuation and should allow the buyers to be a bit more, let's say, opportunistic and having low expectations in terms of discounted valuation. We saw also as a common factor among all these European countries, a change or shift in the regulatory environment in relation to cross-border M&A. And this has been accelerated by COVID, but as Hicham mentioned, it was already starting many years ago. And there have been some effect of foreign investment on the European market that has been always puzzling or more and more puzzling local and European authorities. Obviously, the first, I would say, public enemy in this sector is China. And we can see that the COVID-19 has accelerated a form of protectionism against some foreign investment that would be considered as dangerous or risky for the local economy or for the local enterprises. So this is a very strong tendency that we can see all across European countries. Another issue, obviously, that we are facing for all of these countries is the mobility issue, which is against an adverse effect of the COVID crisis on the cross-border M&A, which on the other side favorized a lot local strategic transactions. So we can see today that the M&A market in Europe is very strongly supported by local transactions or regional transactions, which also confirm Europe as an entity per se and as a unity per se. But we can also wonder about what is the position of Europe in terms of M&A market with respect to the rest of the world. Is Europe still an M&A hub where you can really position your international growth strategy? And the answer is, I was just looking at the numbers for preparing this webinar. The recent classification in terms of M&A or international investment hubs is obviously always the US. But secondly, as Peter demonstrated, we can find UK. And then we can find France and Germany. And actually the fifth one is India for the past few months. So I think we can confirm that Europe remains the right location to consider foreign investment, but obviously depending on where you are coming from. Okay. Now, if I want to be a bit more specific regarding France, and then I will take a few minutes regarding Italy. France, so I would not want to classify France as a buyer market, but actually the COVID impact on the French companies has been much less dramatic than anticipated. I don't want to to exaggerate too much, but this is, I would say, the general outcome of that has been actually considered by the French companies. And this is probably also due to the fact that they had the benefit of strong financial support from the French government, French authorities. But again, as a warning, French companies are definitely looking into reinventing themselves, as our dear president mentioned to us at the beginning of the crisis. And this is, as Hicham mentioned, is obviously a lot about technology and digitalization. So even for companies that had nothing to do before in relation to technology or let's say innovation or digitalization, they are now looking at horizontal external growth to integrate some technological digital capabilities. We can also see a strong trend in France of talent acquisition, so much more on the human dimension, where actually to support technology and innovation developments, you need to have people. And I think there is a kind of reinvestment today in talents in France, especially in terms of engineering and technical talent. Okay. We can also see as a strong trend in France the acquisition of startups by larger or significant companies in France, where as the same philosophy, French companies will try to integrate very new capabilities that could secure a business model or development for the future. It's also a way for each of these French companies to find a way to differentiate themselves from the others. And this is also a real tendency now in France for all of these type of, let's say, traditional companies to find a way to be different than they were. Okay. As a result, we can see a creation of many different ecosystems converging into various industries and to create, let's say, verticality and horizontality in a new environment. So this would be, I think, very interesting to follow in the future. And I'm sure that cross-border M&A and foreign investment can contribute, can benefit from this tendency in France. As Peter mentioned, there is also a strong impact of financial investors also in France. And in France, we can see, let's say, a competition between financial investors on one side and strategic buyers or investors on the other side. And there is no real, let's say, as we can see at mid-market level, we don't see real cooperation for now between these two type of players. Okay, so there is a strong competition in terms of targets. That's why I was talking about buyer market in France, which implying very high valuation and very high difficulties to identify targets that are sustainable because of this valuation issue. This is an element which is different in Italy. In Italy, we have also a strong desire of M&A, but for different reasons. First of all, I think in Italy, there has been, because of COVID, an acceleration of concentration that happened before in other countries, like in France, for instance. There was, in Italy, up to the crisis, strong split of different industries into different small or medium-sized companies. The crisis has accelerated this consolidation, create maybe stronger and larger corporate. Also, another impact of the COVID-19 is for these small enterprises, which are usually family-owned or entrepreneur-owned, to imply a succession, or at least a will for the founder or the owners to sell their businesses, because they don't want to have to face this situation again. And this is very typical, I would say, from Italian companies, which are again usually at individual dimension. Italian entrepreneurs have been suffering a lot about the pandemic crisis. They had to make terrible sacrifices in terms of, obviously in terms of operation, but also in terms of human resources and so on. And these traditional businesses have been showing their limits in terms of possibility to adapt to new circumstances, a new business environment. So we can see a lot of founders or owners selling their business now because they don't want to face this painful crisis again. And this is creating very strong opportunities, I would say, for foreign cross-border buyers in Italy, because as I mentioned, there are no real strong groups or developed groups in Italy that may be able to absorb all of these small companies to be integrated. Okay, it's in a way to be created or to be developed, but still there is a very strong space for foreign buyers on the Italian market, especially in terms of industrial capabilities and consumer products as well. The growth of cross-border M&A in 2021 is 270% compared to 2020. So there is definitely a strong dynamic to welcome foreign investors, foreign buyers in the Italian market.
Thank you. Thank you, Fabrice. Very, very good.
Just one last point, sorry. What we can see in Italy now is most of the deals are structured as club deals, where you have a combination of, let's say, a financial investor together with a strategic investor. Okay, and most of these deals are structured as club deals, so that even for strategic transactions, and this is where we can see that the funding liquidity can be combined also with some strategic approach, and this is not the case in France, but it's very much the case in Italy.
Thank you very much. I find it especially interesting to pit the strategic buyers and the financial buyers. I'm going to let our panelists answer some of the questions, but we have a situation here at Oaklins, Canada, where we are in the midst of a fair-sized transaction, something close to 100 million, and we initially thought strategics were going to be our preferential buyers, but we find ourselves now in a traditional business transaction where financial buyers are bidding much more than the valuation that was initially pitted into the company. So let's quickly go on to some of the questions. Peter, perhaps the first one to you. There's been a few questions about some of the slides that you've put out. Let's see if we can answer these quickly. First question is, how do you explain the multiples in the uptake in deals? And perhaps a follow-on question, is the 11.5 times EBITDA a good average for companies according to your experience?
Yeah, well, it's really just a function of supply and demand to a large extent. So obviously a huge wall of private equity money, various estimates, but some people put it at kind of $7 trillion looking for a home globally, a lot of which is directed at the UK market, and that's a massive driver alongside availability of debt funding and strong interest from cashed up corporates. So that's all driving demand, and obviously a bit of a kind of pent up demand for that lull during the COVID period. And then that kind of 11.5, 11.7 times, yeah, a record high multiple on average for UK companies. The same applies in Europe, broadly similar figure. You have to treat that figure with slight amount of circumspection because, you know, technology companies or SaaS companies often, you know, are getting sold on revenue multiples with limited profitability and so on. So, you know, there's a potential that figure has been distorted a bit, but either way, you know, it is an extremely strong market, and that is reflected in that historically high EBITDA figure. As I said, yeah, a massive variance in kind of various industries, starting from construction services, say, or facilities management around the kind of 6 to 7, up to kind of AI and various other technology companies, data companies, and so on in the 20s. But the average is at an all-time high.
Okay, very good, thank you. For the benefit of everyone on the call, we will be going a bit overboard. We're at the top of the hour, but it's a very interesting conversation. So for those that can stay on, we'll push it beyond perhaps 5 or 10 minutes past the hour. Next question, straight to Hicham. It's a very broad question, and again, let's give a concise answer. But are we heading towards a crash?
Yes, that's a $1 million question, so to speak. So exactly, yeah. And then, well, according to the theory of Black Swan, we may, but I think we should be reading, you know, the future and the time horizon a bit differently, again, through the subjective lenses. First of all, when we make an investment today, the most pertinent ones are the ones that are strategic and they add a value to the business. And with that, we need to build a time horizon according to each transaction, pretty much. And from this perspective, it's difficult to say we're heading to a crash if you make the right picks. Obviously, if you make the wrong picks, we will hit to a crash. We'll get a bubble. So I think to, you know, again, for the sake of being concise, it's not about looking at the outcome when are we going to be out there in 6 months time or 12 months time. It's about, you know, understanding very, very much and very well the current situation, the current business, the scope of its application impact, making that in incremental due diligence we talked about, according to every aspect of the impact of that business or technology or any other thing, and then build a time horizon around it and say by when you would like to achieve this multiple or that multiple and what's your goal. And that's very specific to an investor, be it strategic or be it in a financial. You mentioned that the case of Oaklins Canada, the switch from strategic to financial, and that's for a reason. Again, the risk appetite differs from strategics to financials, and the financial, they have this dry powder that they need to use, and they have a time horizon around it. So it's very, very specific to which investment we're talking about, or which time horizon we are building on. And that's why I would not say that we're heading to a crash, but I would say be careful where you put your foot on.
Excellent. Thank you.
My take on that, and
Sure.
that's very interesting, Hicham. My take on it is that there will always be kind of black swan events which cause market disruption, and COVID was a black swan event that nobody foresaw. And stock markets crashed, the M&A market came to a shuddering halt. But what I'm seeing of late is that recovery periods are much shorter. So the market regains momentum in a much shorter period than perhaps it did historically following black swan events, even kind of 9/11 and so on. And I think just one of the reasons for that is this distortion we have in the market currently, where there is just so much private equity money out there. The big complaint from private equity houses is that there is too much money chasing too few high quality deals, and that has kind of driven up prices to very high levels. But I think the bounce back ability of the market is much stronger than perhaps it has been historically, because of that distortion in terms of supply and demand dynamics.
All right, let's get a one-word answer from everyone on the panel, and I ask you to all give me just one word, and I'll start. There's a lot of questions about whether we are in a seller's market or a buyer's market, and we've addressed that, but perhaps based on your geography. I'll start. In Canada, it is definitely a seller's market. Fabrice?
I would say France is definitely a seller's market, while Italy is definitely a buyer's market.
And Hicham?
Again, depending on the industry, it can alternate between the seller friendliness and the buyer one. That's what I mentioned. It's the change of risk appetite, and due to the pandemic, create that alternation between sellers and buyers friendliness.
Yeah, and overall, extremely seller-friendly market in the UK at the moment. Yeah, there are certain out-of-favor industries, verticals, but generally, extremely good time to sell your business.
Excellent. Very good. So perhaps one last question, and I'm going to ask all three of you, and we'll end with that. We've all heard of companies that are COVID winners, so-called businesses that have thrived during the pandemic. Are you seeing these companies being actively sought out as acquisition opportunities? Hicham?
Well, it depends, again, because some of them, they can build organic growth. And if they are successful to build organic growth, they can make it to the next level, raising capital and moving forward. That's what I will expect most, to seek non-organic growth by being acquired by a strategic partner, mostly the less COVID winner type of companies, I would say.
Okay. Fabrice?
As an M&A advisor, I would recommend to wait a bit before taking any type of M&A strategy, especially on a cross-border basis. Let's to see the smoke disappearing a bit and understand better on a long-term basis.
Interesting take. And Peter, finally to you.
Yeah, these are sectors that have ridden the kind of digitization acceleration wave, and they are absolutely being sought after in the UK. They are the top of everyone's shopping list. As I said, a bit of caveat emptor in terms of there may be a slight one-off impact of COVID, but as Hicham and others have said on the call, it was an acceleration of a trend already happening. So absolutely anything in that kind of digitization space, we would love as clients at the moment, take them on in a heartbeat.
Excellent. Well, we're going to have to conclude. For myself, this was a super interesting webinar, a view from around the world, perhaps a window into how things are now with these online webinars, but we have the luxury of being able to put people on the line from all over the world and get the perspective. So thank you to the M&A Club. Thank you especially to our three panelists today. It was, again, very, very interesting. To conclude on the M&A Club, I invite everyone to refer to the website, maclub.com, and to take a look at our upcoming webinars. We will also be looking, as Bram was saying, at putting together live meetings once again when it is permitted by the local authorities. So Bram, would you like to say something to conclude the call?
Yeah, thank you all very much. This was, yes, hugely interesting, informative, important. It's, we're a small country, Canada, and it's important to know what's going on in the rest of the world, obviously, and which was the original reason why we got involved with the Asian Financial Forum in Hong Kong, so that our members could understand global activities in M&A and hear different perspectives. Speaking again of Canada, so we, as you probably most know, our member administration is handled by the Salesforce platform. We're now expanding it. I've spoken about this before. We're very, very close now, after having talked about it for a long time. But you know how when you develop software, what happens. In any case, we are just about ready to launch a Salesforce Community, what they call Salesforce Community. So you will be able, members only, will be able to source another member. We have 1,200 members across Canada, and it's expanding. So you can search by province and by expertise. We have about 40 or 50 different categories of expertise, from lawyer to purchase order financing, bridge financing, factoring, ABL, et cetera, and members will categorize themselves. And so if you want to find a bridge financing person in British Columbia, you'll be able to find it more easily with that ability. The second thing is our deal listing, which we send out now of 40-odd pages as a PDF every 2 weeks, will now be interactive with our members. So members can put up a deal, take down a deal, edit, contact other members, etc. And that again will be by category and by type of member. So that also will be much easier to zero in. If you're interested in tech or interested in rust belt manufacturing or whatever it is, you'll be able to find it much more easily. So that's coming very, very soon as a member benefit. And we look forward to seeing everyone. As I said, we have, there are 8 more webinars planned now for between tomorrow is the next one and the fall, but there'll be others coming. And we hope to have live meetings very soon. Thank you all very much. We look forward to reconnecting with our three panelists again at some time in the future, hopefully not too long. And maybe you'll participate in one of our all-day forum, which is coming in March 22, or some other event. Thank you all very much. And we look forward to seeing everybody at live meetings.
Thank you.
Thanks,
Thank you.
everyone.
Nice meeting you. Thank you, Bram. Thank you, everybody.
Thanks,
Bye.
Hicham.
Bye.
All the best.
Bye-bye.